Welcome back to the CryptoBot channel, everyone. My name is Josh, and over the past one day, we've just seen a weekly candle close, which is bringing these two important moving averages closer together. And the moment they cross, that will give us a bottom signal that we have only seen two other times, which were at the bottom of both of the previous other Bitcoin bear markets. But right now, Bitcoin is experiencing a short-term pullback alongside Ethereum as well, and I'll be talking more about that in just a moment, so definitely stick around. First of all, just giving you a quick update on the US stock market today. This right here is the Nasdaq 100 index on the daily time frame, and today so far has been a red day, which has also put some slight downwards pressure on crypto prices as well in the shorter term. And it's entirely possible we could be due for some choppy sideways price action in the stock market based on what we saw roughly around a month ago, because what was happening back then was basically the market was indecisive on what inflation would be and indecisive on what the Fed's decision would be at the next Fed meeting. And then as soon as we got that inflation number coming in, because that inflation number was a lot higher than expected and actually broke into new highs for this year, that was a very bearish signal for the market at that stage, because it told us that inflation was only getting worse and that the Fed is likely going to raise interest rates higher than previously expected. And obviously that did end up happening with a 75 basis point hike instead of previously what was expected was a 50 basis point hike a few months ago. And so once again, as you can see here, in the 1 to 2 weeks leading up to that inflation number getting released, we saw a decent short-term bounce back to the upside in the Nasdaq 100 index, followed by over a week worth of choppy sideways price action. And then we saw that inflation number come out and a massive drop because the inflation number was a lot worse than expected. And the next inflation data gets released in a little over 2 weeks from now. So between now and then, we might not experience too much crazy price action in the stock market. For example, dumps like this or pumps like this, because almost everyone in the investing world, whether it's crypto or not, is looking at what inflation is doing. And so that next inflation number that gets released in a couple weeks from now will be very important and likely be another point of inflection for markets. And as always, I'll keep you updated in the days leading up to that event and as soon as we get the results. Now taking a look at the weekly Bitcoin chart, and as you can see just here, we saw a weekly candle close over the past one day, and last week's candle did end up being a green weekly candle, but obviously it wasn't exactly a massive green weekly candle, because right now the Bitcoin price, technically speaking, is still trading within this area of maximum opportunity according to Bitcoin's entire price history. And of course, this area I'm talking about is in between the 200-week moving average, which is the red line, and the 300-week moving average, which is the blue line. And by the way, the 200-week MA is coming into play at around 22,500 approximately, and the 300-week moving average is coming into play at just below 17,000. And historically speaking, apart from what's happening right now, there's only been 3 other time periods where the Bitcoin price has contacted the 200-week moving average, and there's only ever been one other time where the Bitcoin price has hit the 300-week moving average, which was during that March 2020 crash. And obviously, during these previous significant bear markets and these previous crashes down towards the 200 and 300-week moving average, those were the areas of maximum opportunity, with technically speaking the lowest amount of downside risk relative to the amount of upside potential. But if you're taking a look at the price cycle bottom indicator, we're still waiting on this crossover between these two moving averages, because so far throughout Bitcoin's entire price history, we've only ever seen these two moving averages cross over just 2 times. If you're talking about the red line crossing underneath the green line, and both of those crosses happened right at the pretty much exact Bitcoin bear market bottom for the 2014 bear market and the 2018 bear market. In fact, the 2018 bear market was extremely accurate. This happened in the exact same week as the bear market bottom, but the 2014 to 2015 bear markets, we saw this crossover happen just 1 week before the actual bear market hit its bottom. And once again, if you're looking at these indicators right now, they're getting extremely close to crossing over, but they're not there just yet, which tells us the Bitcoin bottom might not be in, but technically speaking, it is extremely close according to Bitcoin's entire price history. And if you want to know more about this indicator, check out my last video on the channel, because in that video just yesterday, I went into more detail about this indicator just here. And now taking a look at the 12-hour Bitcoin chart, and not much has happened over the past few days. In fact, in terms of the short-term price action, we're basically in the same situation right now as what we were in roughly around a month ago. After a significant move to the downside, then we saw a bullish divergence and then a bullish cross in the 12-hour Bitcoin MACD. And what came next was a lot of choppy sideways price action. And so far since the bullish divergence, we've seen a little bit more bullish price action over bearish price action this time round, but most likely we're going to see continued choppy sideways price action of some sort. because in the immediate shorter term, these price oscillators are beginning to lose some of that short-term bullish momentum on this 12-hour Bitcoin chart. And this is even more evident on lower time frames such as the 4-hour Bitcoin chart. You can clearly see the RSI is beginning to form a short-term downtrend, forming lower highs and lower lows. And we've also just seen a small bearish cross in the 4-hour Bitcoin MACD. Now, keep in mind on the 4-hour chart, these signals aren't extremely significant because the larger the time frame, the more significant the signal. But this can still tell us where prices might be heading in the shorter term. And right now, you can clearly see we have broken some key support in the somewhat shorter term for Bitcoin, which was coming into play at around 21.3k. And also over the past one day, we've seen the Bitcoin price on the 4-hour chart break into new lower lows and also lower highs, which is basically the opposite to what we've seen over the past 1 week or so, because obviously over the past 1 week, we've been seeing higher highs and higher lows on the 4-hour Bitcoin chart. But right now, this is beginning to change, at least at the time of recording this video. And as for levels of support and resistance, first of all, we still have strong resistance coming into play at around 21.7k. And as for support, I'll be looking towards this previous low back here and these previous lows back here, which are coming into play at around $20,000 per Bitcoin. In fact, just below 20k more specifically. But the technical price target for a rising wedge pattern is the bottom of the wedge, which is coming into play at around 17,500 towards 18,000. But just keep in mind, we've seen a couple short-term patterns form breakouts and haven't really met the price targets as of recent, which is why it is important to pay attention to these other areas of support where we could turn around earlier than expected. And now, interestingly enough, even though we've seen a loss in short-term bullish momentum, and this is now turned into short-term bearish momentum, if you're looking at this 4-hour Bitcoin chart, we're still finding support along this previous neckline for this inverse head and shoulders pattern, which has technically broken out to the upside, and technically it hasn't fully invalidated just yet because we haven't broken back below the neckline. But considering the loss in bullish momentum in the shorter term, it's unlikely this is going to fully play out towards the price target. Of course, it's possible, but it's becoming less and less likely with less and less bullish momentum in the short term. And by the way, this neckline is coming into play at around 20,500, so that is also a level of support to pay attention to. And now getting into the Ethereum part of this video, this right here is the weekly Ethereum to US dollar chart, and obviously we've just seen a weekly candle close, which actually confirmed last week's candle as our first green weekly candle in about 12 weeks, finally ending that massive streak of 11 consecutive red weekly candles. And that is actually a new record for Ethereum. We have never seen 11 weeks of red in a row until now. And breaking records like that just shows you how crazy the market is right now. And this price movement right here is quite literally what a de-leveraging event looks like, where we see a lot of debt get squeezed out of the market, especially in the DeFi space, which is why Ethereum was so heavily affected. Of course, it affected the whole crypto market, but Ethereum especially fell harder than Bitcoin on this move. But if you zoom into the 12-hour Ethereum chart, honestly, nothing much has happened over the past few days. We're still seeing this bullish divergence play out, and also that bullish cross in the 12-hour Ethereum MACD. But in the immediate short term, as the 12-hour Ethereum RSI has now reset towards the middle of the RSI band, towards those neutral values, we're beginning to lose some of that short-term bullish momentum, also seen in the histogram within the 12-hour Ethereum MACD, showing a slight decline. And these signals that we're seeing right now in the 12-hour Ethereum chart are very similar to what we saw roughly around 1 month ago, just before a slight pullback in the price of Ethereum. But for the most part, we're still experiencing a lot of choppy sideways price action, which is still what I'm mostly expecting in the coming days and potentially in the next 1 to 2 weeks on this 12-hour Ethereum chart before we get that inflation number in a couple weeks from now, where we could experience more volatility when that happens. And if you zoom into the 4-hour Ethereum chart, we also have a very similar picture right here to the 4-hour Bitcoin chart. We have a similar rising wedge pattern that has technically broken to the downside with some 4-hour candle closes. And personally, I'll be keeping a close eye on this line right here, which was previous support for this rising wedge pattern and should now be acting as new resistance, and that is coming into play at around 1230 approximately. Because if the price of Ethereum cannot break back above that level right there, and more importantly, if we do actually revisit that level and get a rejection, that would further confirm a potential break to the downside, and the technical price target for a rising wedge pattern, once again, is towards the bottom of the wedge, which for Ethereum is coming into play at around $900, but keep keep in mind, we don't always reach the technical price target based on other areas of support and resistance. For example, we had that previous inverse head and shoulders pattern that did break out to the upside, gave us a technical price target much higher than what we actually got to. But of course, as I covered on this channel days before we got this rejection, I was saying we had strong resistance between 1250 and up towards 1280, and the Ethereum price turned around at pretty much exactly 1280 as I was talking about days before this happened. So that is why it is important to not only pay attention to the price targets, but also pay attention to other levels of support and resistance. And on this 4-hour Ethereum chart, once again, we have resistance coming into play at around 1230, and anything above that, we still have strong resistance at around 1280. And as for levels of support for Ethereum, in the immediate short term, I'll be looking towards around 1170 to 1180, based on this previous low that we formed around 2 days ago, and this previous high that we formed roughly around a week ago. And anything lower than that, I'll be looking towards this previous low that we also formed close to a week ago, coming into play at around 1040 to 1050. And once again, back on that weekly Ethereum chart, we have strong support at this 38.2% Fibonacci level, which is coming into play at around 1050. And if you want to know how to make profits on these short-term price movements, even if the price is going down, make sure to check out this video popping up right here, which shows you how to make money in crypto, even if prices are going down. But anyway, that is everything that I have to say for today. I really hope you enjoyed it, and I'll see you all in the next video.